We have Viraj Gandhi joining us on the phone line as well. Poonam, please stay with us. Viraj, the loss number has come in at 3230 crore rupees. And this quarter was expected to be subdued. How do you read this number, 3230 of loss?
See, what I see on the face of it is that profits from on the PPP levels, operating profit level, the number stands at 4,285 crores of loss, which to us is looking very dismal at this point of time. But what has happened is that the interest expenditure in this quarter has gone down compared to the last quarter. I don't understand how is this possible. This can only be possible if your total liabilities, that is your deposits, have gone down sequentially. I don't have that number with me at this point of time. And the net NPA ratio at this point of time is showing, approximately 60 basis point lower on Q-on-Q basis.
Okay.
Which again means that there has to be a lot of write-off in this quarter for the bank.
Okay.
So that means there is a lot of asset which is written off by the bank.
Okay.
If that is the case, then what I understand is in the last quarter the bank said that we have taken into account all possible loss accounts in the last quarter itself. But if it is again resurfacing in this quarter, to me this number is not looking that great.
Numbers not looking that great. Viraj, please hold on the phone line because we also have Ravikant Bhatt of IDBI Capital Market Services joining us on the phone line. Mr. Ravikant, thank you so much for taking time out. 3230 of loss for the quarter. Net interest income at 3330. Put this into perspective. This has to be dismal numbers as far as Bank of Baroda is concerned.
Yeah, then I don't know. I mean, whether I would use a very harsh word, but yeah, I mean, it does disappoint. And I was listening to Viraj, the provisioning number does surprise me. So I certainly hadn't expected it to be this high. So yeah, I mean, it's a bit on the disappointing side.
Right, Ravikant, this is Poonam here again joining in, and just a correction. Yes, definitely, if this is a loss and this is a substantial loss coming in there at 3,230 crore. Correction there in terms of the huge loss versus a similar loss in the last quarter. So that's a substantial loss, and I'm sure Ravikant. None of the analysts were working again with such a huge loss, in fact, during the quarter, because most of the analysts, we did check out the estimates of most of the analysts. At least 90% of the analysts were working out with a profit. What do you make of this initial number, especially in light of how do you read these 2 points? We're seeing a stable provisions on a sequential basis. 6,800 crore is the provisions during this quarter, versus if I look at the absolute gross NPA itself, absolute gross NPAs itself stand at nearly 40,500 crore. How do you read both these numbers?
See, what was told post the third quarter results was at least the AQR related accounts had all been taken care of, which is why the loss was exceptionally high particularly for Bank of Baroda in third quarter. So, given that a significant amount of stress had been recognized, and the bank was supposed to move towards more normalized slippages, though that was supposed to happen more from first quarter, still it was expected that the level of slippages at least would show some downtrend in this quarter. That clearly does not seem to have happened. And the provisioning has stayed elevated. The loss also has stayed elevated. So, I would want to ideally understand why is it that it stays this high after what was done in the last quarter.
Viraj, this question comes to you. I'm looking at a provision cover this time at nearly 60% versus a provision cover of nearly 53% in the last quarter. Does this explain why we are seeing, is this the only reason that could explain why we are seeing a slight reduction coming in there in terms of the net NPA at 5.06 versus a 5.67%?
No, the NPA percentage are coming down. If I can just reiterate, if you see the balance sheet numbers given for 2016 compared to 2015, all the assets and liabilities for this year is way below the last year. So the balance sheet has contracted this year, and because of this, the percentage are not looming up so much. If you compare like to like, if there was a 15 to 20% jump in the balance sheet, that percentage would have been much lower. So what I understand at this point of time, there has to be a lot of write-off from this book, meaning there will be a lot of GMR or JP or Adani or stuff like that, which will be written off by the bank in this quarter. And we need some clarity on that thing as to what are the number of accounts, GMR, maybe GVK for the bank. So at this point of time, it will be very difficult to just comment on the face of it with the numbers that are flashing on the screen. We need more details in terms of the impairment of the assets, slippages, and also the amount of loans that have been sold to ARC by the bank in this quarter. Only commenting on the percentage and the absolute amount of gross and net NPA will not be fair for this at this point of time.
Right. Would you also, let me just read out a few numbers as well. We are seeing definitely a balance sheet contraction coming in here. The advances stand at 3.84 crore, 3.84 lakh crore versus a 4.28 lakh crore on a YOY basis. And we are also seeing a contraction in terms of the deposits as well. The deposits stand at 5.74 lakh crore versus a 6.17 lakh crore in FY15. So this is the kind of substantial consolidation that has happened in terms of the balance sheet. Management did indicate in terms of balance sheet contraction there. Siddharth, this question is coming to you. What do you anticipate in terms, besides of course the asset quality, what do you anticipate in terms of management commentary, especially in terms of the growth both in the loan and the deposit book? Do you still think that the consolidation would continue? Siddharth, this question was to you.
Hello. Yeah, hi. See, this number has been quite surprising as far as this provisioning number is concerned. But actually, going by this number, what basically I would look is, as it was guided in the Q3 numbers, that, possibly the most of the AQR accounts has been recognized, and possibly we are seeing a normalized amount of size of business going ahead. But certainly this has come as a very surprising thing. So what I would, rather than trying to extrapolate this number, I would like to hear is from the management is that whether this quarter itself really clears all the problematic assets or something more is still pending in a big way. So instead of I would analyzing this number, I would like to listen from the management what actually is looking ahead, because certainly this provisioning number indicates that there has been some big accounts has been written up basically. Looking at the gross NPA, it has remained almost constant, and even net NPA has declined. So it clearly indicates that certain big accounts has been written up, and that is clearly showing that the stress is really not over. So I would definitely look forward for further guidance and clarity about the quality of the book, and maybe we'll take a call on that post that.
Okay, so Ravikant, again back to you. We do understand by now that definitely asset quality stress, which was again the key monitorable with the kind of NPAs and with the kind of provisioning also that the bank has done this quarter, that of course needs to be understood far better again right now. Besides that, how do you see the margins for the bank? Do you think that we would continue to see some amount of margin compression going ahead? And the second, I will just include another question in this. What do you make in terms of the capital itself? Do you think that the bank still has sufficient capital, or would they still have to raise further capital? Ravikant? Ravikant, this question was to you. Okay, Viraj, this question comes to you. I think we have lost the line on Ravikant. If you could just help us understand, do you think that the management did mention in the last quarter that they do have sufficient capital on their books? Do you think that the management could continue with this amount of capital that they would already have, or would they still need to raise further capital if this is the kind of stress that is there on the books as of now?
Whenever you get stress on the books, you always require capital. If management is saying that they don't require capital, there has to be a certain amount of growth that is there in their mind. Let's say another 7 to 8% kind of balance sheet growth that they must be thinking for the coming year or two. But if the industry is supposed to grow, let's say at 12 to 20%, then the bank will require capital, because there is a lot of bad thing that has been written off for this quarter. So there is no way in which I can see that the capital that they have currently is enough for their growth coming forward.
Right. Viraj, this question again has come to you. What would you say in terms of valuation? I understand that it is too early to even speak in terms of the valuation without listening to the management commentary, but the stock is already trading at nearly around 0.9x FY17 price to book, and most of the analysts either as of now, they either have a hold rating or a slight buy rating in terms of Bank of Baroda. Would this kind of rating continue, or would we see further cut in terms of the book value and in terms of the EPS estimates post this quarter results?
See, as a house, we are advising all our clients to just stay away from all the PSU bank, be it whatever. If you understand the valuation properly, the ROAs of the bank currently are in the negative zone. Why would you like to invest in any bank where you don't have a return percentage in your favor? As simple as that. And if that is the case, we are not worried whether the bank is reporting loss of 2,000 crore or 3,000 crore. It's just a stay away kind of a number. But we are just invested in private banks and will continue to do so in the coming quarters also. Till the time we change our view, we need certain amount of clarity from the management in terms of posted results that this kind of results are sustainable. But looking at what we are doing, I think we are happy staying away from all the PSU banks.
Okay. Siddharth, this question is coming to you. Just on the face of the results, without even the management commentary as of now, do you think that the stock has a potential of, in fact, opening gap down on Monday morning just on the face of the results as of now?
See, all depends on the clarity that is to be given by the management. But what I would say that, this kind of provisioning was certainly not expected by the street. So it has definitely come as a very kind of a negative surprise. Only good part is that, they have tried to increase the provisioning coverage ratio. That is only comforting point. But here, looking at from pure valuation point, I would just like to tell you that this quarterly loss again has to be kind of, adjusted with the net worth. And hence the capital adequacy also further dips, what we had seen in the Q3. So certainly if the bank looking for further growth, they would also need capital, as they had mentioned earlier that they will not probably require any funds from the government. So again, there would be a possibility of dilution. So I don't feel that, there is a upside left in the stock at the near term. And I would possibly look that, possibly there should be at least a knee-jerk reaction to this result. But having said that, I would say that more clarity from the management, if at all this quarter really takes care of all the pain left in the balance sheet, then possibly that could take care of any negativity. But it all depends on how the guidance comes forward for FY17. And that is all, I can say, looking at this number without listening to the management.
All right, Siddharth Purohit of Angel Broking, thank you so much for joining us as this shocker of a number from Bank of Baroda's fourth quarter breaks here on Earnings with ET Now. Thank you, Poonam Sani, and all our wonderful guests for joining us over here to put those numbers into perspective. Yes, we will be looking for management commentary to understand what exactly is going on at Bank of Baroda. And that we wrap things up here on this edition of ET Now News First at 5. Thank you so much for watching. This is Krishna Kumar signing off.